everybody. This is Chris from the Max. I'm just starting this a bit early than the scheduled time, just so that we can fit in a bit of the sales side of things. Eusebia should be in shortly, but can you let me know if you can hear me at all in the question box? And for Max's, if my machine doesn't blow up, you can use our regular chat room if you want to jump into there. So I think it sounds like Eusebio is in the background as well. Hi, Eusebio.
Hi, Chris. Hi, everyone.
Let me see. Sorry, my machine managed to explode its little brains out just before starting here, so I'm scrabbling around in the background here, getting things ready. But thanks, Robert and Valerie, Ingrid, Kieran. Looks like mostly Max is here at the moment. We've got about 600 or 700 people lined up for this webinar, either live or by video. So I just thought I'd say a few words before we get into it so that you know what we're on about, so that we don't interrupt Eusebio's presentation too much. And Eusebio, jump in on this at any time you like. So this is, okay, that's enough of that particular page. I'm Chris, and I'm partners with Craig. We're based in the US and New Zealand. This will be our 52nd set of Max courses that we're promoting, which is why we're running this live workshop today. And we've got something like over 1,800 members that have been through, students that have been through the Max. I know it's kind of jumped up 200 since the last session, but that's because I wasn't counting all the I was looking at the wrong list. So there's 1,500 live members and 300 that sort of hang around that are bouncer or something like that. So we do have actually had over 1,800 people do the Max in one form or another since 2008. Eusebio will be presenting tonight. He's based in Belgium and France, shifting between the two places. He's a full-time Forex trader and Max instructor. He's had 15 years experience in the banking industry, and prior to that he was playing in his roles while he had his day job as in software business. He was trading in stocks and options and futures and doing all sorts of work in there as well. The Max trading system was created by Dr. Jim Pruitt. He died in about 2009 and asked Craig before he died and I to carry on with this business. So we've been doing that since then. So we've been at this for quite some time. Like I said, this will be our 52nd time. What he put together was a really amazing system, and even today, like almost 10 years after he started, almost coming up to it, I'm still surprised at how well he put this thing together. Eusebio has been invaluable in tightening it up and making it even safer than what Jim put together, and Eusebio has also been able to explain what Jim was trying to explain. Jim was pretty enthusiastic when he got to teaching, and wasn't quite used to the screens, I guess, and so when we were looking at the chart he would be sort of several pages ahead of us, and it was a real, I found it a real chore to try and follow what he was trying to explain. But thankfully Eusebio was there and was able to put it all together in a format that's easily understandable, that you can pick up and that you can use to trade with. But I must say it's not easy. There is a lot involved in the Max. It's like going from, as you'll see in some of the examples coming up, it's like going from pedaling to the shops to get your shopping to hopping in a racing car. There's a lot that needs to be learned. It doesn't matter what sort of system you do, it will still take a lot of discipline and patience and persistence to actually get anywhere. With the Max, it's like putting on the turbochargers, as you will see. Okay, the Max is essentially a trend following method. We do some counter trend trading in the more advanced courses, but mostly for the primer and for the intro courses, it's simply trend following. We don't try and guess where the market's going. We get into a movement when it says to, and we sit there and we follow it until its end. With the standard, we work a bit more differently. We have a whole pile of excellent money management rules, which Eusebio and Jim put together to actually boost your profits. So if you look at our website, we do say that we can increase your profits 30 to 300%, and I'll show you how right now, well, right after this. So our entry setups are based on opportunities, opportunities based on technical aspects and risk conditions and the global context, like what is the market doing, when's the London Open coming up, what news is there, is this a risky situation to get into, like are you trying to enter after a large movement that's passed already, and a whole pile of technical aspects as well. And while a lot of other trading methods out there rely very much hugely on indicators, and we do at times have a lot of them running, we don't absolutely rely on them. They are there as a guide, and once they say, okay, we're good, we check out all the other risk conditions. And in fact, when we train, it's almost like we're telling you when not to get in as opposed to when to get in. We want to protect your money more than make a profit. And if we can keep your money intact in your account, then any profits you get will make it grow, as opposed to just trying to jump in on whatever sort of looks good at the time. On the exit side of things, we've got a huge slew of them, and you'll see why in a minute. It's so that we can get out at the tops or the bottoms of the movements once they're almost over. And to do that, we rely on, again, technical indicators like momentum and, yep, momentum's a good one, as well as pure price action, for instance, almost like candlesticks, almost, and combinations of them as well as timing. And if price gets away from us, goes in the wrong direction, then we have invalidation criteria to help us pull out of a trade. I'll show you an example of that as well. So here's what you can expect. If you've been trading normally with just a simple, for instance, this is taken from the primer course, and it's reasonably simple based on a pattern. It does have some excellent risk management techniques built in behind it, but just to show you what's happening, if we have, yep, the mouse is working, if we have an entry down here and we move all the way up to here, the max primer will pull out pips from this area here, and it'll be able to get something like 25 pips from it. We also talk in things called R's, which is a Van Tharp thing called risk-reward ratio. And essentially, if what's happening is, if you're going to risk $100 on your trade here, then this R multiplier will tell you how much you would have made from it, and also what percentage of your account you would have produced as well. So in this case, half R, or 0.56 R, on $100 would have made you $56 on it. It's that simple if you just keep it like that. And you can add them up, so it doesn't matter what size trade you made. You can just simply add up the R's, because sometimes the pips don't. You have fat pips and you have thin pips, and they don't always necessarily line up. With the Max Lite, you can get a bit further. This is our second course that's available if you go further with the Max. But what we're promoting at the moment is just the primer and the standard. So the primer will return something like 25 pips out of this complete movement here. If I jump onto the next page somehow, you can see that the standard is able to exit somewhere all the way up here. And it's the yellow signs. So it still starts at the same area down here. It has another entry at this point here, and it has taken some profits along the way. But essentially, instead of getting a simple little 25 pips out of the first movement here, the Max Standard pulls out something like, I'm sorry, I read this wrong. Let me go back. Okay, the Max Primer pulled out 28 pips, not 25. I was reading how large the stop loss was. The Max Standard pulled out 260 pips, so almost 10 times what the primer could do. And that's simply because we've been able to stay in the trade longer, and we've been able to add extra orders to the trade as it's gone. And if you stay with the Max and take, for instance, the advanced course, you can get even more pips out of it. Depends on the movements, as always. I mean, if the movement was flat, then the primer and the standard will produce pretty much the same amount. But once the trend starts moving, that's where we really milk things, and that's what the max is designed to do. Eusebio, you wanted to say something?
No, continue.
Oh, okay, cool. Thank you. Okay, this thing changes all on its own. And here's an example of it going downwards with the max and the light, with the primer and the light variants. So the primer is in yellow, and it pulls out something like 22 and 61 pips from two trades, one here, and where's the other one? And another entry at this point. So the first trade finished here, and the second trade finishes down here where it says triple exit. And the max light has an extra entry technique, so it can go a bit further. So the difference between the max primer and the max light, in case you're wondering, is an extra entry technique and some extra exit techniques. But to compare the primer and the standard, like I said, it's like turbocharging the results. So the primer here has returned a result of about 1.6 R. So if you'd placed your bet, your order with a risk of $100, you would have come out of it with something like $164. It's a very simple way of thinking about this. And with the standard, the same movement would have come out with $400. So it enters up here, and there are several extra entries along the way. That's where it says SC, meaning scaling. If you're watching this by video, you can just pause this and check the chart out. I'm going really quickly because I know that London has just opened. So we can multiply our profits hugely by our advanced money management techniques. And if you're using something like Max Advanced, you can boost it even further. Again, it all depends on the actual movement of price. But Eusebio, I need to switch over to you yet? Or do you need to take over?
No, we have some time. Don't worry.
Okay. Well, I've only got about 2 or 3 minutes left on this, I think. You know me and my talking. So the important piece to remember here is that primer gives you a good taste, a good introduction to what we are like if you want to test us out. And it does give you a profitable system to trade, whereas the standard is the full course with all the money management and really boosts things along. And then once you've done the standard, Eusebio has developed this thing called ETF SAM, or SAM ETF, which increases profits even further. And it's almost a counter-trend entry situation. And it picks up on all the small nuances as price jumps down. So it's not just a trend trading system, it's also reversal and counter-trend trading as well. It's much faster and requires even more concentration and discipline. Here's an example of it on that same chart. So I'll just jumping around. The standard produced an R of 4. So if you'd risked $100 up here, you would have ended up with $400 at the end of this. Whereas with ETF, if you'd risked $100 at the beginning of the trade, there are extra entries and such along the way because of the purpose of the ETF. You would have come out with nearly $2,000 at the end of it, not just $400, but $2,000. So you can see by using the money management that's built into the standard, along with the ETF technique, you can really get to your goals much, much faster once you can capture a large movement like this. Okay, and just in case you were wondering, it also works on daily charts. So this is a daily time frame here showing an ETF entry all the way down to the bottom here, also producing something like 14 times what your initial risk was. So if your initial risk up here was $100, like I've been talking about, you'd end up at the end of 65 days, 2 months, $1,400. It's slower, but it gives you more time to analyze the charts. But I'm just showing you that because the other charts were 5-minute charts, I think, and this one is a daily chart. So the max works on all types of charts. In situations where there's losing situation, and this happens a lot, you might have entered incorrectly, And if you're finding that you do have trades that go against you and you're not too sure why, then we are here as instructors. Just send the charts in and we'll analyze the chart and sort of do our best to point out what you did wrong. A lot of the times people forget really basic stuff, like they entered at the end of a long movement, they forgot about news coming up, they entered just as the London Open was happening, for instance. We don't enter prior to the London Open because it's so volatile. And just to give you an idea. And here we go with the sales piece. I'm going to jump through this, but I've been talking about the primer course and the standard course mostly. The light course and the advanced courses can come in a package. Just ask us how to get hold of those. And we ask you to do a pile of homework, and if you're watching this by video, you would have seen this in the intro video anyway, but I'll just skip over this piece. Okay, sorry. Like I said, my machine destroyed itself just before starting up, so my presentation had to be done in a rush 5 minutes before I spoke here. But the bottom line is we're offering two packages. One is the Max Standard course, normally $299, and we've got a webinar special for $249. It runs for 7 weeks, and after that you'll be invited to the Max Forum and our practice sessions, which we call scoring parties. Generally there's at least 2 or 3 of those a month for the standard course. And for the primer people, if you just want to try us out, only a couple of entries here. This is the full course. It's only a couple of entries. It's only a couple of days of training. It's okay as a taste to see what we are like. It is profitable, but it's going to be very slow to sort of really make any money out of this, unlike the Max Standard. And what I've noticed with taking the primer is you don't get all the quality time with the instructors that you do with the standard. You'll be asked to do homework with the primer, but there's only a couple of entries that you get to send in and a couple of exits that you get to get checked up on. You're welcome to keep sending them in, but those are the official ones. Whereas with the Max Standard, you get 7 weeks worth of homework, and so you're really ingrained in it. You're immersed in the course, and it's really hard not to learn anything correctly. We ask you to do the homework to make sure that you do actually understand what's going on. A lot of people can learn something, or think they've learned it, and think they've learned it correctly, but it's not until somebody else from the outside actually looks at it and says, no, you've got this backwards or upside down or around the wrong way, that you can actually find out that you're doing it correctly or incorrectly. Okay, so this page will be up later, and Craig will be sending out the links so that you can have a look at these. The links also take you through to the packages that are available. So with the Max Standard you can get all 3 courses, the primer course, the light course, and the standard course, and that will take you about 4 months to go through, pretty much, plus all the homework. So if you're just starting out, it's a really nice way of doing it. If you're already a reasonably competent trader, or you'll break even with your trading, then the standard can help push you over that edge. What happens is, with the Max Standard, if your entries are just okay-ish and you're kind of making some money and losing some money, then our stops should tighten you up quite dramatically, our exit points. Plus, once you get into a trade and you start making money on it, that trade generally makes up for all the losing trades that you've had. And so long as you're able to stay in there, which is a bit of a challenge for some people, but once you can stay in there, you can really make the money as you've been able to see so far. And that pushes you over the break-even edge. And then it's kind of like a, what do you call it, a rolling stone that's gathering moss, I guess. You make a bit of money, you're out of the break-even situation, you become more confident, you start making more money, you start becoming even more confident with what you're doing, and things build for you, so your account gradually builds up. Okay, I think I've done my dash here. Were there any questions here? Okay, so for those of you who have just arrived, I better explain this. I did start before time just so I could get a bit of salesy stuff in for the video people. But I'm going to pass over to Eusebio now. If you want to take over the charts and show us your charts, Eusebio, that'd be great.
Yes, sure, Chris. So let me make the switch. So
Okay.
Make presenter. And I have to show my screen number 2. So here it is. You should see my screen now.
Okay, got it, Eusebio.
Okay, and for all the attendees, do you hear me well and do you see my screen well?
And just as a reminder, Max people, you can join up with our regular chat room. And if you don't know what it is, just have a look back at one of the scrolling parties. There's no password to get in tonight, so ask whatever questions you like. And for those of you who are just joining us that aren't Maxes, then go to webinars, go to question area. Please feel free to ask any questions in there. So I see a lot of you are already. I'll relay them on to Eusebio because I think he'll be watching the charts mostly. So thanks, Eusebio, all yours.
Thanks, Chris. So just a usual disclaimer. This is not a trading room and I don't call trades. I cannot call trades officially. I'm not licensed for that. You know, I'm living in the Eurozone, in France and in Belgium, which are 2 important countries in the Eurozone. And here we have very strict regulation rules. So what I'm going to show you today is not trade. So don't take the trades I will analyze. What I'm going to show you today is how personally I analyze price movement with the MAX. Okay, but there is always risk-taking trades, and so even if with the MAX we have an interesting winning rate, 75% on average, every specific trade is risky. Okay, and so it is important for you to realize that and so to take your own responsibility. So that disclaimer being said, so another small details. A few days ago, 3 or 4 days ago, I have had a small accident here in Belgium with my cup of coffee and milk, and so
Haven't you fixed that yet?
No, I have had no time to fix it. Sorry, I have been very, very busy with my relocation. So
Sure.
you will perhaps see here in the right lower corner of my screen here, just below my cursor, a small spot.
It
inadvertently
doesn't come through, Eusebio.
Okay, I just to explain, because we never know, it can expand. I have put some coffee on my screen, coffee and milk, and I have a small black dot now here, or spot, and it seems to be stabilized, and so as long as it is not dry, it will appear on the screen. My intention was to change my screen, but I have been so busy I have had no time, even not the time to change, because I have 5 other screens here. I haven't got time to make the switch, but I think it will not be disturbing. So, well, now let's start the serious things. Every day when I start my trading session, and this is something we explain also in our course and in some specific mini courses we have, is what I call my daily preparation routine. And during the steps of this preparation routine is I analyze the different elements of the market to see where potential action could be, because this is an important point. This is what I call understanding the global context. Because by understanding the global context, we can find the most interesting or worthwhile possible trade during the day. Because of course, for any trading system to work, you need to have movements, and movement relatively important and relative to that trading system. Because we are trend followers, we want to catch pairs where trends may develop. And so to do that, we of course analyze. Among these steps, we analyze the news. And today, if I show you the calendar, let me show you the calendar in a moment. I have just to bring one screen here. We can see that on today, we are, so Thursday, for this morning, we have, in fact, the ECB Economic Bulletin at 10 a.m. my time. which is now in around 3/4 of an hour, and half an hour later we have the construction PMI on the pound, which is an important one for the pound pairs. Later, a little before the US Open, 1 hour before the US Open, we have the official bank rate on the pound with all the other related events or news. I don't expect a change in the bank rate, but because of that, we may see somewhat the pound less traded as usual. But we can still see some volatility in the market with the construction PMI and the ECB economic bulletin. Yesterday, we have had the Fed funds rate with the FOMC statement, which has been finally rather neutral. Always explaining a moderate improvement in the economical conditions, so not a lot of influence at all. A little bit disappointing for the market. This is why we are seeing the US dollar a little weakening since the Fed announcement, but this should not last for me too long time. When we analyze other elements of the global context, like for example the main medias, to have some objective fact about the economy, and I will not go into the details here because it's not the scope of this session today. It is explained in our courses. I see a positive bias in the euro. I see a negative bias in the US dollar, positive bias in the yen. So this means, and so we have an important news release in the pound in 3/4 of an hour. This means that there are some pairs which are necessarily interesting to observe. And so when we make a combination of the currencies like the euro, the pound, the US dollar, and the yen, we can get the euro US dollar, the euro yen, the pound US dollar, the pound yen, and the US yen. And I like to often add a very volatile pair, like for example the pound Aussie or the euro Aussie or the pound Kiwi or the euro Kiwi. Because I'm limited with one screen, I will show only 6 pairs. And so now, we are waiting most probably a long setup in the euro pairs, and we can see that the euro is trying to break that resistance here in the euro US dollar. The euro yen is trying to cross our home base channel to develop a new upward movement or trend. It has retraced right to the home base for the moment, and we are also waiting with a weak US dollar along an up movement in the pound US dollar if this resistance level is broken. Let's draw, because this seems to be a very interesting pair to consider. What I will do is on the pound US dollar, I will draw support a resistance level, and wait for the breakout to happen, and I will adjust my here. And we can see that the breakout has happened. It has happened on this candle here. So we have here what we call, long entry setup, and I will mark it with our conventions, a green dashed line. And normally we have an entry in this, somewhere in this area, long entry with a stop loss. We have a spread of 3, so stop loss somewhere in this area. Let me see. Yeah, right on the home base channel, so somewhere here, giving a stop loss of 25 pips. So ESL 25 pips. But I'm going to don't take that trade, because first of all, it is not a trade I can call, but there is some risk I will explain in a moment. Oops. Large font size. This is better. On the chart, let me enlarge the chart. And let me quickly check the other chart to see if we have something interesting developing. It doesn't seem, no. Let me explain why with the max we consider this this trade as a risky trade. You see here a red vertical line. The two yellow lines represent respectively the Frankfurt Open and the London Open. And then we have two red vertical line representing the two news I have mentioned, the ECB economical bulletin, and later on at 10:30 my time, so in 1 hour and 10 minutes, the pound construction PMI. The ECB bulletin, I don't consider it as, for the moment, as a big concern for the pound US dollar, so I will ignore it. So, but we have here the construction PMI, which may have an impact on the pound pairs. In the case of a surprise, which may be positive or negative, we don't know in advance what will be the issue of that news. But and because of that, so trading in front of an important potential news is for us gambling. And we have a very strict rule with the max is if a setup appears 1 hour or less before such a news release, we skip the setup. We have to skip the setup. If we are in a trade, we will leave the trade, we will close the trade when we will be half an hour before the news release. And so here the entry was at 10:15, so we are at 1 hour and a quarter before the news release. We have time enough to take that trade, but we know in advance that that trade will be short-lived. We will not have too much time, perhaps 3/4 of an hour for the trade to develop and then close the trade. And so this is why I mentioned that that trade is somewhat risky. And when we perceive such a risk in a trade, of course, it is out of question to apply our scaling technique, because scaling in, especially at the beginning of a trend, add risk to the position we are handling. Even if the risk is well controlled, we consider we are not gamblers, we are risk taker, but we want to keep the risk very, very controlled. So no scaling in such an opportunity. Later on, but at the beginning of the afternoon, 1 hour before the US Open, we have the bank rate, the official bank rate announcement on the pound again. So until then, and until the US Open approximately, the movement will be tougher to trade. But anyway, we may still see some such opportunities. I have had to be fast here to indicate that kind of setup, which is, by the way, called BO-REMO. BO, and I will explain in a moment what is the meaning of BO-REMO. So BO means a breakout, because you can see that I have had to wait for the breakout of this resistance level. We have rules to draw our resistance level. We don't draw them at any place. We have one specific rule to define where to draw it. And so we have to, it is considered as a tight consolidation area. So we have to wait for its breakout. And it is a REMO, because in fact the trend is already in effect for some times. If we scroll in the past with the chart, so the trend has started 2 days ago on the 31st of January, so 2 days ago. So we are still in that trend, and at some point we have had deep pullbacks, and then the trend resuming. So we are in a condition of a trend resumption. This is why we call it a REMO. So this is a combination of a trend resumption and a concession zone breakout. Because, of course, whenever we have to consider a potential entry setup, we have also to analyze in which price modes the price is evolving. We have several price modes: the trend mode, the counter trend mode, the consolidation zone mode, for which we have to make the distinction between a tight one and a large one. Both situations do not trade the same way. And we have the choppy mode, which is complex to define, more complex to define, but fortunately we have a few opportunities in a choppy mode. And a specific price mode we call a spaghetti zone, which is a price mode when we have never ever an entry setup. We have to wait to be outside that mode before getting a potential setup. In all the other modes we may get entry setups. And each setup, so which takes into account the market conditions, has to be handled in a specific way. Our stop loss is called an ESL, an emergency stop loss. Emergency stop loss because that stop loss take into account the fact that we may have some technical problems while we are trading. For example, our connection may go down, in which case we are blind. And of course, it is under such condition that the market decides to go against the trade, and so we do not want to be facing such kind of situation. So the ESL has the aim, the first aim, to protect our account in such a difficult technical or technological situation. So, of course, while we are in the trade, and if the trade evolves positively, we will adjust regularly the stop loss in order to reduce the risk on the trade. And sometimes we will get a risk-free trade. So now we have to pay attention what the price is doing after our entry. And we can see some volatility, which is due to the London Open. Of course, you see here the London Open has been made at the open of this blue candle, where I have my second yellow vertical line, and so we get some volatility, which is usual during the first half hour of the London Open. And we don't need to fear that kind of volatility. This is normal, because when the London Open, there are a lot of new orders coming in the market, which have been accumulated by the traders in the bank executing the orders from their customers. I don't call these traders, but we are used to call them traders. The real traders in the banks are the traders trading the money of the bank or the money of their important customers. And there are two types of such traders, what we call the market maker and what we call the money maker. And so their roles are very specific. The objective of the market maker is to catch spreads. So they make entries and exit. They open, they close trades on both sides, trying to catch the spread from all these entries and exit. But their aim is not to exploit movements. And so normally their position must be neutral. And sometimes it may happen that one of their position get imbalanced, and then the trade will be then handled not by the market maker but by the money maker, who will have to handle the position. And the aim of the money maker is to make money for the bank, with several types of objectives, depending on the bank and depending on the politics or the policy of the bank. And these traders are the traders who are able to move the market. And these professional traders, you may be surprised, but there are a lot of them, and almost all the time frames are covered by these traders. Of course, each of these traders will work with one or two specific time frames, but all the time frames are covered. I have seen, for example, extreme small time frame, like 10-second time frames used by some professional traders, as well as extreme long time frame or high time frame like the monthly time frame. And between them, all the time frames are covered. And so this is why all the time frames are good to trade. Okay? All the time frames are good to trade with the max. We have trends in any time frame. And so it is so important to define what a trend is. And with the max, we define when a max trend starts, and when we can exploit it, and when the trend has a chance to end or to exhaust. We never know for sure when a trend exhausts, but we have some guidelines telling us to say, okay, this is a good point to exit the trade, because the trend now is most probably exhausting. And if later the trend resumes, we have always the possibility to open a new trade to exploit the rest of the trend. So I see some question: on which time do you usually trade the max system, London opening or later? Roland, I personally, all the sessions are tradable. You have to choose the pairs you trade. Even the ASEAN session is good to trade with Pacific pairs. Personally, I trade the European session. So from the Frankfurt Open up to the London close. So it's a 9 to 10 hours time period. I don't trade usually that long. Usually my trades are 3 hours to 6 hour longs. Okay? But because for many pairs, the best time period to trade is the London session or the European session, when we trade a small time frame. And a small time frame with the max is from the 1 minute time frame up to the 1 hour time frame, even the 4 hour time frame. I consider the 4 hour time frames a time frame which is at the same time a small time frame and a high time frame. So making the limit between both. Trading is also a question of numbers. We have to find where the time period when most of the pairs move interestingly. So here we have now an exit setup bar, which is called a long bar, okay, which has just closed. And a long bar is always a good opportunity to make some profit. Let me measure what kind of profit we could make. Not a lot, but because we don't have a lot of volatility. But the length of this bar is, let's say, let's measure it correctly. So 8 pips. And so I like to take 1/3 of that for the retracement, so it will be a little less than 3, so it will be 2.6. So here, approximately, I will draw an horizontal line here. So 2.6 will be 2.7 will be right below the low of this present candle. And so if the price hits that level, yeah, I will make my first MX. I'm sorry, I have had to be fast. I wanted to show you the trade monitor, the max trade monitor, our EA, but I have no time to indicate the entry setup bar. But if we have time later, I will show you. And you can see that whenever we have a long bar, which is an entry setup, an exit setup bar, an opportunity to bank some profit, we have to consider how much we accept for a retracement before closing half of the trade. Whenever we open a trade, we consider it is made of 2 units, 2 units having the same size, and the size of which is defined, not 21, but 2, of course, the size of which is defined by our position sizing concept, taking into account the size of the stop loss and the financial risk we associate to the trade, for example, 2% of our trading account. And when we make an MX, we will close 1 unit. The max trade monitor allows to do that very easily. We don't scalp, Thomas. We don't scalp the market, so we don't care too much for the spread. And the spread is very often a misunderstood concept. For example, if I mark to make my entry here on this point for the breakout WIMO, don't forget one thing. The MetaTrader platform always shows the bid price. Okay, always shows the bid price. When we open long a trade, this is our entry level, but the execution is made on the ask price. So the execution will be made a little higher, 2.7 pips approximately higher. And so let's suppose the MX, so the exit would have been made here. The profit would have been here, if I measure from that level to that level, so 9.5 pips. I have to deduce the spread, let's say 3 pips. So my net profit would have been 6.5 pips, okay? And when we close a trade, partially or totally, the execution is made on the bid price, so on what we see on the chart. So here, let's see if the price will hit that level, in which case I will simulate a push of the button to make an MX, which our max trade monitor allows to do. But as long as that level is not touched or crossed by the price, I don't close my first unit. It may happen at any moment, by the way. And if it doesn't happen, we will wait for another exit condition. And so we can see that for our exit rules, we have several types of exit rules. We have exit rules based on indicators. We have exit rules based on pure price action only. We have exit rules based on a combination of price action and indicators. We have exit rule based on time along the day. We have exit rule based on some guidelines taking into consideration the type of trend when the trend is unfolding, and we have an exit rule based on the movement invalidation concept we have within the max. How did you know it is not a false breakout? What often happens? Yes, Roland, and this is why it is important to understand the global context. If you remember, I have said at the beginning of this session, my analysis of the global context tell me that I am positive on the euro, neutral on the pound, very negative on the US dollar, and positive on the yen. And so a good candidate is to go long on the euro US dollar, on the euro yen, on the pound US dollar, so long, and we can go short with the pound yen, for example, or short with the US dollar yen. Okay? So depending on the bias I defined, based on my understanding on the global context, I know in advance, until the news release, of course, what is the direction I have to privilege. Of course, this doesn't mean that the movement we are seeing may still be a head fake. But because we have precise exit rules, we increase the probability to extract even a small profit from such a head fake. And this happens very frequently. You know that a head fake typically, let's suppose that this movement will be a head fake. In such a case, it will depend on the nature of the news release we will have, mainly on the pound here with the construction PMI. But very often, not only, but very often, a head fake will have the following pattern. A first up movement, a retracement, a second up movement, which can go higher or lower or at the same level than the present top, and then will continue downward to develop a downtrend. So typically, such a head fake will have an M pattern. Sometimes just a top, a V pattern, or an inverse V pattern, but the legs of these head fakes are still worthwhile to be traded with the max. Don't expect a big profit, of course. But if you can, if you are extremely attentive, you can still extract some profit from these head fakes. And this is true with the max primer or the max standard, but it is even better with the max sum ETF, which better exploit more details, many more details in the price action. But we can see through our EMAs and our higher time frame that everything, for example, is set up for a continuation of the uptrend, which is never a 100% guarantee, of course. We never know for sure what the future will be. But the understanding of the global context is a way to better understand what are the intentions or what are the objectives of most of the professional traders. Not all the professional traders have the same objectives, of course. For example, you all know that around 12 to 15 banks around the world controls more than 80% of the Forex exchange market. And these, let's say 12 banks, okay? Not all these 12 banks have the same objective. Sometimes they will have the same objective. Sometimes you will have two groups with opposite objectives, and it will be a hard fight between these two groups. Sometimes you may have 3-4 groups, which make these days very difficult to trade. When there are multiple opposite objectives among the professional traders, these different objectives makes the day more difficult to trade. But sometimes you will get also nice opportunity because this can create volatility in the market. Not necessarily momentum, but volatility. The ideal situation is when you get both momentum and volatility. Now the price is moving in our direction. For example, now the price has moved around 16, 17 pips in our favor. This does not mean such a profit. An MX has not been made yet, you see. And so I will now progressively reduce my stop loss. And we have rules to reduce the stop loss that way, for example, here. And now the stop loss will be 10 pips plus the spread, let's see, 13 pips, we have almost divided our risk by 2. Okay, so in the worst case scenario, the risk is now divided by 2. And in practice, in the best worst case scenario, if I can use that expression, in fact, our risk will be, in fact, only around, let's say, 2 pips plus the spread, 5 pips. So this means that we have divided the risk now by 5. But in the worst case scenario, we have an internet connection problem, our stop loss will be here. Okay? We can have a quick look at what the other pairs are doing. We have a similar situation here with the euro US dollar, so which is making a breakout of that resistance area. And we may see perhaps the euro yen going down. The pound yen may perhaps resume to the downside, as I have explained for my bias, so shorting the pound yen, and the USD yen perhaps too. But it is facing a support area. Let's come back to the pound US dollar here. In such a situation, we are almost sure to make a profit with that pound US dollar pair and trade, except if we get, for example, what is in fact a worst case scenario in this area, in this context. You see this candle seems to be a red candle. Okay, if the price continues to go downward and close below the open price, it would be a red candle. But the problem is we never know how far the price will go. And so if it becomes a long candle, it can even close below our entry price level. And this is one such rare event where we can still have a loss from a trade which starts as a potential winning trade. But we still have that level for our MX, which is in place. Bjorn, not necessarily. I have begun to explain something about the spread, which is a point which is not always well understood by traders. In fact, the spread must never be taken as an absolute number, but it must be compared to the volatility of the pair. Let me write something here. Let's suppose that the pair 1, I will write not too fast because I want to check what is happening on the pair. Let's suppose that the pair 1 has a spread of, let's say, 2 pips, but an average daily range of 100 pips. Okay? Let's take that example. And let's consider another pair, the pair number 2, which has a spread, let's say, of 3 pips, but an average daily range of, let's say, 200 pips. Okay? If we follow the argument of many traders stating that smaller is the spread, better it is, we are wrong here, because we would choose to trade the pair number 1. But in fact, for me, in terms of spread, the best pair to trade is the pair number 2, because it has a spread which is a little larger, but an average daily range way larger. If we calculate a relative spread compared to the average daily range, we have a 2% spread for the pair number 1, but only a 1.5% for the pair number 2. And so what I consider is always the relative cost of the spread based on or compared to the average daily range. Don't forget, we are trend followers. We are not scalp traders. If we are scalp traders, of course the spread is important, but we are not scalp traders. Now, if you scalp only, yes, of course, smaller is the spread, better it is. Okay? So you have always to consider the cost of trading comparatively to the trading style you are using in your trade. Okay? I can further tighten a bit my stop loss here, that way, reducing further the maximum risk on the trade. And in practice, this area here is what we call our area for the concept of the movement invalidation. So in the worst case scenario, if the price comes in this area with a specific rule, we will close it. And so you can see that we are almost break even because this area corresponds to the area of our entry here. So in practice, without any technical problem, our trade now is virtually risk-free. And this movement invalidation goes upward now. And so making progressively the trade even a sure winning trade, except we have no technical problems. Okay? We have that news at 11:30. This one is at 11, so half an hour before the pound news release. So this red line will be also our limit of time when we will have to consider to close that trade. Because I am a little more experienced with the news release, sometimes I wait a few more bars, but I never close my trade within the 15 last minutes. I close my trade before. So I still have 5, 10, 15 minutes maximum as a time to close my trade. But most of the time, half an hour before the trade, before the news, we consider to close the trade. And so you can see that, in fact, with the max, we have 3 main components. We have technical aspect. The setup is defined with a specific patterns here in the price. Okay? And we have several types of entry setups. This is the technical aspect. We have the risk aspect. The risk aspect contains 2 elements. First of all, the size of the stop loss. Don't be surprised to have what seems to be a large stop loss. This is a way to avoid these spikes we may have when the price is consolidating, when the buyers and the sellers are fighting, possibly. During these type of market conditions, we may have larger spikes. And if you have a 2-type stop loss, very often your stop loss is taken out and you miss a good movement. And so taking a larger stop loss is not a problem because we will use, consequently, a smaller trade size. And a second aspect of the risk we explained in the course, we want to have the setup having an appropriate structure comparatively to the risk we are taking. And so we have several types of criteria, the trade risk ratio, the potential move ratio, and so on, telling us that the risk we are taking on the trade is appropriate. It has nothing to do with a potential profit we can make. Many traders define a potential target profit, and if the profit is large enough, they take the trade. We don't use target profit. We want to extract as much profit as possible from a movement. And this is due to the fact that we consider the risk differently. And the third component is, which is for me the most important one, and you get the illustration now today, is the understanding of the global context, where the action is supposed to be and in which direction. We may be wrong, of course, but at least we have this allow us to have clear trading plan, and we follow our trading plan. I have announced in advance that I would have been long in the pound US dollar, and so my trade is a long trade. Okay, and this is due to the preparation, the daily preparation routines, telling me where the action, in which currency the action may be, and in which direction. Remember, I have said long the euro, neutral the pound, very negative the US dollar, long the yen. Long or positive, negative or short. Okay? And so neutral on the pound and very negative on the US dollar means long on the pound US dollar. And of course, my setup has been in agreement with the global context. This is why we may be almost sure up to now that this will not be a head fake. It may still be a head fake, but at least the trade has been easier to consider and to take. And now we have just to handle it in an adequate way comparatively to the max trading system. I don't like to say the correct way to trade because I consider there is no correct way to trade. The correct way to trade is always relative to the vision you have on your trading process. And so this is the correct way to trade relatively to the max, of course. But if you have another trading system, which is also a good trading system, but with different rules, the correct way to trade your trading system or the market is to follow your rules. Here we have the RSI, the stochastic of the RSI, which is stopping now, and which will give, in the case the price will begin to retrace, a top. And a top in the RSI is also a potential exit setup. I say a potential exit setup because we don't always follow it. It depends on what the price action is doing. And with the price moving further upward, I can tighten my stop loss. And now I will tighten my stop loss in this area. You can see that the movement invalidation area is now located here. And so in practice, it is above our entry price level. If we don't have a fast, aggressive reversal, we cannot lose on that trade. And we still have not made an MX. And the price has moved, not a lot. I don't expect large movement. You see 20 pips approximately. This bar may be perhaps an exit setup bar. We will see. In which case I will explain to you how I will consider my MX. Most probably with the max standard, we would have an exit in this area with the max standard. Because with the max standard, we have more precise, more accurate exit rules. Now, this is becoming a long bar itself. And so I will define where I will make my MX. So that way, for example. Yes, I make my MX here. So here I push on the button and I consider I have made my MX. Okay? You see, I always define where I consider an MX, an exit, and when the price hit that level, I make my MX. So I close one unit here. This is what the max trade monitor would have made. We have an MX button. I will show you that after the close of that trade. And this MX closes one unit. And it has banked a small profit here. You see, 14 pips, let's say 14 pips minus the trade, 3 pips, 11 pips. So plus 11 pips. We are left with one open unit. I can still tighten further my stop loss here, that way. Not too much, because the price has not moved too much in net movement. But now, if we make a trade risk analysis, we have banked 11 pips on the first unit. If my stop loss is here, the risk on the second unit will be only, so you can see here 2 pips plus the spread 5 pips. We have a risk of 5 pips on the second unit. This means that if I lose these 5 pips, my net profit will be 6 pips. I have made a small profit on this trade. And in practice, my exit will be in this area. So even my second unit in practice will be in profit. Not a big profit, because we have a rather large stop loss, but a profit. In front of a news release coming. But we had just time enough to take that trade. I will move these notations a bit lower to see better what the price is doing here. Now, at the close of that red candle, you can see that the Stochastic RSI has made a top and has triggered an exit rule. If we follow that exit rule, the bar has not closed yet. We still have 16 seconds. So let's wait for the close of the bar. Anyway, we would have an exit area, an exit level in this same area. Okay, now the close has been made. So with the exit rule triggered by the Stochastic RSI, we would have an exit somewhere in this area here if the price follows through. So you can see that our MX as I have made here is not a bad one. I see there are some max graduates in the room. For those of you who have the max standard template, can you tell me if we have TT rejection in this area? I suspect we may have one in this area when we have these two pins, these 2 wicks to the upside. I'm curious of that. Because I'm using the the max primer and max light template here, but with the max standard we have a more elaborate template and with more exit techniques, of course, more accurate exit techniques. Yes, Chris.
Hi. Yeah, there's a mid TT there.
Mid TT. Okay.
Jason and Susan replied. So, yep, you got it, guys.
Okay.
Sure.
Okay. So you can see I recognize them visually depending on what the price is doing. We are so used to the behavior of the price action in some special area of the chart that even if we don't have these tools or indicators on the chart, we can recognize where they are. And so with the max standard, we would have made an MX somewhere in this area. Okay, I don't know exactly where, but it is somewhere in this area. So banking more profit, of course. See, 8 more pips. Now, of course, we have 2 exit rules triggering, one with the way I have explained here because of that long bar forming, and on the next bar with the Stochastic RSI. When we have several successive exit rules triggering, we don't take all of them. We always take one. Okay? Hello, Benji. Nice to see you. Susan, Jason, Oscar, thanks. It was the second TT. Okay, thanks, Oscar. I see also regular attendees in our scrolling parties, so that's nice. So we are left with one open unit. We have opened 2 units on the breakout Remo entry. We have closed one on the MX here, and so we are left with 1 unit. And perhaps we will be forced to close that second unit with the time constraint here, or perhaps 1 or 2 bars later, but not too late. Because we don't know what will be what the construction PMI, the new release, will be. Now, with the economic report of the ECB, we can expect some volatility, but we don't care now. We are in a risk-free trade. Usually the ECB economic bulletin is not considered as an important news release. In the context of all the problems in the Eurozone, it may create some volatility. Because, of course, the fact that some countries are still in an economic crisis, even recessions, with the Brexit problem, for me, I consider it as an opportunity. We can see some impact in the different economies, and so we may have here some volatility. So we will see. You have, in fact, in trading, if you want to trade more objectively, more professionally, you have to always expect what the market can give you. And so you have to expect what may happen in the market. And this is an important but also a difficult part of what I call understanding the global context. Because the global context must take into consideration the fundamental aspect, the micro and the macro fundamentals, the political aspect, the geopolitical aspect, the intermarket correlations. You know that when some other markets are moving, these moves may impact also the currency market, not necessarily in the same direction. For example, there are important markets like the bonds market, which is the yields market, the gold market, the oil market are all important markets which may have, the stock market of course, which may have an impact on the currencies or some currencies. For example, you know that gold may have a deep impact on the CAD. Crude oil may have a deep impact on the CAD too, or on the AUD, for example. Gold also has an impact on the AUD. Bonds may have an impact in all the corresponding currencies. For example, when we have the yield of a US bond increasing, this is good for the US dollar. The yield, not the bond price. When we have the yield of the euro bonds, this is good for the euro, and vice versa. Tox, I apologize if I pronounce wrongly your name, Tox Oguntuga. The question is, my first time here at your webinar, does the MAX system have a scanner? I mean, how do one identify from a glance a coming profitable trade? Depending on the level of the MAX, yes, we have a scanner. We have a scanner while we achieve the MAX ETF level, which is the upper level of the MAX. And this scanner, you can define any pairs you want and any time frame you want. It requires a good PC because it uses a lot of resources from the PC, and so but it gives you clear indication where potential trades are happening. Now, when you have a potential trade, you still have to make the analysis to see if the trade is in adequacy with your analysis, and mainly with your understanding of the global context. For example, here, with the pound US dollar, let's suppose the breakout would have been to the downside. So because we have here a support level. If you observe carefully in this area, obviously we have a support level. Should the breakout have happened to the downside, because my bias for the US dollar was negative, neutral for the pound, so long for the pound US dollar, should a short setup appear, I would have skipped that setup. But that setup would have appeared in our scanner, because the scanner is only based on technical conditions. Okay? So a scanner giving potential setups must never be followed blindly. You have to select, to pick your setup based on all the conditions the MAX define. And I remind you, we have three types of conditions: the technical aspect, the risk aspect, and the global context aspect. And all the conditions must match before we open the trade. If one of these conditions does not match, we skip the trade. And the aim is not necessarily to take as many trades as possible, but to take trades which have the highest potential to end as a winning trade. So we have to be extremely picky. We are interested more in the quality of the trade than in the quantity of the trades. Okay? Does this answer your question, Tox? Because we never know if the trade, even if all the conditions are fulfilled, we never know if the trade will be a winning one, a profitable one. And this seems paradoxal. If you take 100 trades, a sample of 100 or 200 trades, you can predict in advance with a high accuracy what your winning rate will be, what your profitability will be. But if you take each trade individually, you cannot guess in advance what the result will be. Okay? Well, we are now in the half an hour limit of our trade before that news release. I see that the price is going downward. We can decide now at any moment when to close that trade. Okay? And so normally a max trader will close the trade. It would have already, or he would or she would have already closed the trade at the beginning of this, at the open of this candle. So I have been a little too wordy. So let's consider I push the button now here, and I have closed my trade here. Okay. So this, and you see, so I follow the rule half an hour before the news, I close the trade. And we see the price is going against me. Because now, why that half hour limit? Because very often, the few minutes before the news release, generally 10 to 15 minutes, but sometimes a little more, we may see movements before the news release which are speculative movement due to the news release. And these speculative movements are gambling trades for us. And so here, when we push the button with the max trade monitor, the max trade monitor will mark here XXX. And I note XXX1, which indicates the first trade of the day. XXX indicates that we close all the remaining open unit. In this case, one unit. With the max standard, should we have made some scaling, we would have several open units. Okay. So I close one unit, sorry. With the max standard and several scaling, we would have several open units. And so we close all of them. And so here that second unit has banked here a profit of how much? So let's say here, so we have 10 pips minus the spread, 3 pips, so 7 pips. As I have said, a small trade plus 7. Okay? And so when the trade is closed, because of the news release, I don't care if the price resumes the up movement, because for me this is not an interesting time period to trade. Most of the time it is not a good time to trade or to stay in the trade. So I don't care if the price moves upward and I could have closed the second unit at a better price. I don't care. I follow my rules. And so here now I can write what the max trade monitor would write for me. So trade number 1. We take the number of pips of the first unit, 11, which is the net profit, the number of pips of the second unit, 7 pips. So we have made 18 pips. So plus 18 pips. The stop loss, the emergency stop loss was 25 pips, if I remember correctly. Yes, 25 pips. This represents a realized reward to risk ratio as I have announced. The trade would have been short-lived because of the conditions. So the reward to risk ratio is plus 0. It should be easier, 36 R. So this means that if I would have allocated a 2% risk on that trade, I would have increased my account by 0.72%, almost 3% of a 0.75%. With a 1% risk, I would have increased my trade by 1% times 0.36, or a little more than 1/3 of 1%. Okay? So this is why we like to use the Von Tarp notation. We think the trade or the result of the trade in terms of R's. R's represent the risk, 1 R. It may be 1%, 2%, 0.5%. It depends what is your own risk averse. Usually, when a trader starts with a small account, he is attempted or she is attempted to use a larger risk per trade, 2%, for example. But you will learn that with a larger trading account, you will naturally, and this is a good approach, you will lower your risk per trade. typically, now in my trade, I take, depending on the market conditions, between 0.5% and 1% maximum per trade. And I never take more than 2 trades simultaneously. Okay? You should know that statistically, with a 75%, even with a 60% winning rate, which sometimes we get with the max, because 75% is an average winning rate. It can temporarily drop below 75. Sometimes it can go above 75, 80, 85, even 90%. It depends also on the time frame. With a 0.5% risk per trade, and if you take only 1 trade at a time, you are virtually protected from the risk of ruin. So you cannot get ruined normally if you trade with discipline. If you apply your rules with discipline, you cannot get ruined with a 0.5% risk per trade. And with a 1%, it will be difficult to get ruined. So now we have to wait. You see the ECB economic bulletin has created some volatility. We can see large weeks to the upside or to the downside with the bars. And so now we are facing the construction PMI on the pound. So we have to wait. This will happen in around, how much time? In around 20 minutes, 19 minutes. Okay, so if you have questions, so I will gladly answer these questions. And in the meantime, I will see what other pairs have made. So we can see that on the euro-US dollar, we have had a similar breakout here. I would have placed my support, my resistance level here, in this area, and we would have had a similar trade with a smaller result, yeah, because small movements. With the euro-yen, I said short the euro-yen. We don't have the appropriate condition yet, but we have to wait the news now. For the pound-yen, I have announced a short bias. We are waiting for a short setup, but we are in a consolidation zone with a clear support level in this area, but we have to wait for the news. And then for the US dollar yen, my bias was also short, and you see that the breakout of the support level has been made, but too late to take the trade compared to the news release, because it was the setup appears 55 minutes or 50 minutes before the news release. So out of question to take that trade. We were not in the right timing to take that trade. And you see that the trade would have failed. So we have to wait for the news. And I like to observe another very volatile pair, like the pound Aussie. You see the pound Aussie is in a short movement with a nice breakout of this support level, very large support level. And but we have to wait for the news to be released in order to see a potential setup in the pound Aussie. Yes, Chris, you want perhaps to mention something?
Well, I was thinking, I'll just turn that off. Perhaps the news watch list, you could mention that.
Yes. Just a moment. I'm taking
Sure.
a sip of coffee. And this will answer Oscar's question. I don't use a news indicator. There are a lot of indicators for MetaTrader displaying news release on your chart, but first, I never do that for several reasons. First of all, these indicators usually uses a lot of your PC resources because they have to extract information from economical calendar, and usually they do not allow you to choose the appropriate news to follow. And so what I do is I mark my chart manually. What I have done this morning during my daily preparation routine is I have marked just one chart with the Frankfurt Open, the London Open, the US Open. Later on, I would mark also the Frankfurt and the London Close, the Wall Street Open, and then I mark manually the 2 vertical lines for these 2 news. It takes a few seconds to do that, and then I save the template and I apply that template to all my other charts. It takes just 1 minute to indicate the news on the chart. And often one chart is enough. If you want to be informed of the news which are really important, because unfortunately not all the news are interesting, what I do is I use, of course, an economical calendar, and the Forex Factory calendar is a good one, but also our website. I'm going to show you in a moment. Let me display it. maxtradingsystem.com. Okay, here is the browser. Okay, and we have this button, which is News Watch It, and when you click on that button, you land on this page. You can subscribe. It is free. Just give your first name and your email address, and so each week we update the list of the news we consider as very important. For example, for today, which is Thursday, we had, as you can see, we have the construction PMI at 4:30 a.m. Eastern Time. Okay, so it is now in 14 minutes. Later on, we will have, for those of you who trade the bonds, the French 10-year bond auction may be interesting to trade essentially the euro. But then we have this afternoon, 1 hour before the US Open, we have the official bank rate with the monetary policy summary, the votes, the inflation report too, and the monetary policy for the QE in UK, coming up at the same time. And I mention that news as a major H4+. Major means that the news may have an impact in case of a surprise on many pairs, possibly, in the small time frames. So from the 1 minute time frame up to the 4 hour time frame usually. When we indicate H4+, this means that the impact may also be present in higher time frames. H4, daily, weekly, monthly. This is typically what we will see tomorrow with the non-farm payroll and the unemployment rate. You can see that it is indicated as a major higher time frames. Furthermore, it is in red because this is a news I will especially pay attention and possibly trade. And so you have all the information here. All the other news you may find in an economical calendar have generally no impact, generally. Or if there is an impact, it is a small impact, even in the case of a surprise. Now, what is a surprise? If we go to the Forex Factory calendar, but any other economical calendar is good too, we see here for the construction PMI, the forecast is 53.9. Okay? If we get a number like, for example, 60 or like 40, let's say 60. 60 is way larger than 53.9. It will be a good big surprise. If we get 45 or 40 or less, it will be worse than that number and it will be a big negative surprise. So the difference between the actual number when it will be released and the forecast must be large enough. Now, I will not explain all the details of how much they must be different. It is called a deviation because it depends on each news. In fact, sometimes a 10% deviation is enough. Sometimes it requires 20, 30, 40% deviation. This is the case for the non-farm payroll tomorrow in order to define a big surprise. If we don't get a big surprise, a small surprise or not surprise at all, the impact in general is small in the market. And when we get a big surprise, the impact will be important. However, it may be, depending on the currency, it may be important in all the pairs or in only some pairs. And this makes the news analysis a little more complex than you may think, in fact, because the impact is not the same depending on the currency related to the news release. For example, most probably, if we get a big surprise, positive or negative in the construction PMI, the impact will be only in the pound pairs. Most probably. Okay? but no impact in the euro-US dollar, for example. We will see. In 10 minutes now, we will see. Let's hope we will have a big surprise, okay? To see the impact on the other pairs.
And there's also the top 10 list there as well, Eusebio.
Oh, yes, sure. Sorry, Chris. I have forgotten to mention that. And so, when we scroll down through the Max News watch list on our website, later on you have what we call the top 14 pairs. In fact, these represent the pairs which have been the most moving during the last 4 weeks. So we are used to say the most volatile, but volatile is not an appropriate term. The most moving. For example, the pound US dollar during the 4 last week has have an average daily range of $1,400 per day on average, or 140 pips per day. I prefer to consider the average daily range not in pips but in dollars, because at the end of the day, what is important is not how many pips we have made, but how much money we have made. And sometimes you will see, look here, the pound yen. The pound yen has an average daily range larger than the pound US dollar, but it makes less money than the pound US dollar in dollar average daily range. The pound kiwi, 174 pips as the average daily range, but less money. And so the pip is not enough to have a good idea of the volatility of a pair. The pip value is important, and the pip value is taken into account in the average daily dollar range. And this is what is important for us. 4 weeks allows us to take also into account some fundamental factors. And when there are fundamental factors driving the market, chances are very high that they will still continue for at least for a few days. And when we take a 4 weeks average, we can count on that on the following week, among these pairs, we will have many of them still moving in a similar way. And so when you have too many pairs to choose, you can make a finer selection by considering the pairs which are in this list in the descending orders. Okay? And so it's not a surprise to see that we have the pound US dollar, the pound yen, the USD yen in my list of pairs I have selected for today. Okay? Because this is an element of the global context understanding. Well, are there other questions?
I can't see any others, Eusebio, but I'd just like to say that on that news watch list page, I know Eusebio has spoken to you about a lot of information regarding the news. I've also written a lot of that down on that page itself, and it's repeated over and over every week. So if you want to follow what we do, a lot of detail is on that page. Just letting you know. And you don't need to sign up to it. If you do, then I'll send you out an email to say, hey, it's ready now. But otherwise, just log on to the page each time you want to use it and click on the button at the top of the page.
Yeah, you have the explanation on how to use the news watch list and the top 10 pairs, so, and the impact, where the impact can be. Okay?
Yep.
The advantage of subscribing is you will be informed every week when this list will be updated. So it is just a reminder when the update is made. So you can take profit of that. And because, in fact, when you consider the Forex Factory calendar, which uses, but this is similar with other economical calendars, they are all using a color code or something similar to indicate the relative importance of the news for the market. But unfortunately, that color code is not necessarily correct. For example, at the Aussie here, we have an orange color, which is an average or a medium impact for the trade balance. But in fact, for me, it should be in red. A trade balance is always a very important news release. Probably it is in orange here because it concerns a small currency like the Aussie. And you can see that the news release has been very positive for the AUSSIE. So normally the AUSSIE has strengthened during the ASEAN session, and you should see the ASEAN, the AUSSIE pairs moving in favor of the AUSSIE normally. Okay, so you can test that, you can check that to see if indeed it has been the case. So we are now at almost 5 minutes before the news release. So with the construction PMI, so if I make the update of my calendar, I should begin to see a small green button here. So let's wait 5 more minutes and see what will happen. Now, we can, of course, try to understand what the issue of the news can be. Remember, it is a news related to the pound, to the construction PMI. Sometimes, for some news release, the banks, the important banks, are or have better forecast than the forecast shown in some economical calendars, because they have important economic department which invest a lot in forecasting. And so what do we observe? We observe that in the pound US dollar, before the news release, we see the pound US dollar going upward. This can mean the pound is strengthening or the US dollar is weakening. If we observe the pound yen, we see that the pound yen is also going upward. This shows that most probably it is the pound strengthening. When we observe the pound AUSSIE, we see also a retracement, a bullish retracement in the pound AUSSIE, showing the pound is strengthening. So most probably the big boys are forecasting possibly a good news in the construction PMI. So we will see that. And so sometimes by observing the movement prior the news release, for some news, not all of them, for some news, and the construction PMI is one of these news, we can have a good idea of what the news may be. Qualitatively speaking, not quantitatively speaking. Simply by observing what the speculative movements are before the news release. So we have 3 minutes to wait. You are using our watch list every day, Oscar, and you find it useful. Thanks very much. I always appreciate your comments about the informations we distribute to our members or to those simply who follow our website. So 2.5 minutes. Now, in the absence of a news release here on the pound US dollar, okay, in the absence of that news release, this retracement most probably would have been an opportunity for a scaling. Okay? Because that exit would not have been made, and the price has not retraced enough to reach what we call our movement invalidation condition, the trend resumes upward. In this area, most probably we would have had a scaling, which is forbidden because of the news release. If it happens that the news release is very negative for the pound, you will see the pound US dollar reversing quickly. But as we see, we may expect a good number for the construction PMI. We will see now in 1.5 minutes. 1 minute. Now, the rule is if we have a big surprise, we will see volatility. We will have to wait for the volatility to settle down. If we don't have a big surprise, so if we have only a small surprise or no surprise at all, so no impact in the market, we can take the next setup which will appear because nothing will have changed in the market. And if there is some volatility due to a big surprise, so how much time we will have to wait? It depends. We have to be patient, and so we have 52.2. So just a little less. Let me show you on the calendar. 52.2 compared to 53.9. So a little bit smaller. So a little bit negative, but not a big surprise. The deviation is a very small one, 1% deviation, 1.5%. Not a big deal. So normally we should see no impact, no significant impact in the market. Not enough to reverse the present long trend, in fact. And so the current trend should hold. And so this means that for a pair like the pound US dollar, I will still consider a long trade, so an upward movement, downward movement for the pound yen. Okay, and for the other pairs have no impact with the consumption PMI, so with the bias I have indicated previously. And for the pound Aussie, because we are in a downtrend, we will consider a possibility for a short setup when a valid short setup will appear. So the deviation, the difference between the forecast 52.2 and so the actual number and the forecast 53.9 is not big enough to be considered as a negative number. And so if we decide to continue to trade on the pound US dollar, so we have to wait for a new entry setup in the pound US dollar. And sometimes it can take just 5 minutes, sometimes it can take 1 hour. But it's not forbidden to consider another pair to trade, the euro US dollar, the euro yen, the pound yen, and so on, provided we have the appropriate setup and conditions. Any questions about that specific aspect of the news release? And now we handle it with the max. Of course, in the course, in the different courses, we go further in details to know exactly how to handle these kinds of situations, of course. In order to get a setup, we always have to wait for the bar to close. We never have a setup, an entry setup bar before a candle closes. An entry setup bar is always defined at the close of a bar. And so we can already say, because we are close to the close of this candle, that this candle most probably will not be a valid entry setup for a trend continuation. Simply because the entry would be too far away relatively to the price mode we have. This price mode is a trend mode now. We have rules telling us which kind of price mode is, and when we are in a price mode, we have also strict rules defining what is a valid setup bar. So in this case, it will not be a valid setup bar because we are near the close of the candle now. So we need to be patient. This is why on each of my charts I always write patience and disciplines. This is a good reminder for me to be attentive to what is happening and not run after the price. It's not because the price is moving upward that I want absolutely to take the trade. I take the trade only when all the conditions are fulfilled. If my entry is not a good entry, I don't take the trade. Ten seconds before the close of that bar. Price pulling back on the euro, this is good. A setup will appear very soon, most probably in the euro yen. And soon perhaps in the USD yen too. So let's consider again the pound US dollar. This is not a good entry setup. The max graduate will notice it because this would give us an entry here, which is too far away comparatively to the price area where we have our usual entries in a trend mode. So we have to wait for another opportunity. So this means that we have to wait for a deeper pullback. If the trend stays intact, we have to wait for a deeper pullback, and the trend must continue or resume to have a better entry. Now it may happen that this will be a head fake. In prevision of the bank rate announcement in now around 2 hours and a half, let's say, for example, the Bank of England will lower its interest rate, which is not what is expected. It will be a negative surprise, pushing the pound US dollar to the downside. So in this case, this would be a head fake, and it has a typical pattern for a head fake. But you can see, as I have explained, even if we have time enough with the max, we can also exploit for small profits these kind of legs of the head fake. Okay? And sometimes we can even exploit the both legs. And sometimes we have 3 legs, but this is less frequent. The most frequent pattern is 2 legs, then less frequently, but in second place, 1 leg, and in third place, 3 legs. Now, it's not sure it will be a head fake, because if the Bank of England doesn't change its interest rate, doesn't change its monetary policy, we will see no impact in the market, so there will be no reason for the trend to change. Now we have an interesting situation developing in the euro US dollar, but we still have time, 2.5 minutes. We have an interesting situation developing in the USD yen, but we have to wait for these bars to close. Now, when we have the choice between 2 pairs to trade, and you do not want to trade both of them, the possibility is to trade the most volatile one. You can see that the average daily range for the euro US dollar here is 89 pips. For the USD yen is 444 pips. So most probably the USD yen is the most interesting pair to trade. And if you check the top 14 pair list, the USD yen is in a better position than the euro US dollar. And so it's better to consider trading the USD yen. You are not stuck to the same pair. You can make 1 trade in the pound US dollar and the second trade in the USD yen, for example. Because you have to wait for the pound US dollar to give a more appropriate entry setup. I may perhaps illustrate how the max trade monitor works. Let me set the auto trading, yes. And I will use the USD yen because we have setup appearing. common. I will use a 1% risk. Confirmation no. And I will use a 1 pip maximum slippage. So we have some parameters. We can use, of course, preset files. I click OK, and you will see two windows opening. They are opening in my other screen. The button panel and the pair panel. And I will explain, if we have an entry setup, I will illustrate the use of the trade monitor here with the trade. I will first of all tighten my stop loss. Okay, now we have this candle is an entry setup bar. Okay, it's an entry setup bar. We have all the conditions fulfilled, and I will make my entry somewhere in this area. So if the price hit that level, yeah, let's say that level, I will make my entry. So I will push on the sell button. I have specified my stop loss size. It will be around 20 pips here, which is good for the pound, the USD yen. I have specified a 1% risk for the trade. So the max trade monitor will consequently calculate automatically the trade size when I will push on the sell button. Here we have the sell button. We have two other buttons. We have the MX button and the XXX button, as I have illustrated manually in the previous trade on the pound USD. So MX will close one unit, XXX will close all the remaining open unit. If I have the opportunity to make a scale-in, it will be another sell. I will simply use the sell button, which will then open two more units. The stop loss is a global stop loss. Now on the trade panel, we have mainly two columns, a global column and a symbol column. The symbol column will give us the result as they evolved for the trade on the USD yen, if the trade is opened. Okay? And I watch specifically two important numbers, the result on the ESL, which is expressed in percentage, and the result on the XXX, okay, which is also expressed in percentage. We have also for all the opens which are closed or opened, the profit or the result which have been taken in percentage or in pips, and the remaining risk on the opened unit. You have some other additional information like the size of the stop loss, the spread, the ratio risk on entry in dollars, and so on, the position pip value, the time the trade is opened, and so on. So we have a lot of information. And if there are several open trades, the global column will give the global position. And if we have two open trades, we may have these two panels open for the first trade and two similar panels open for the second trade. And the global column will show, the symbol column will show the result for individual pair, and the global column will show the resulting global position. So you can see that the trade has not been opened. In the pound US dollar, we have the retracement we were expecting. We still have the retracement in the euro US dollar, so no opportunity for the moment. We can also attach the two panels to the pair screen in such a way that if we move the window of the pair, the two panels will follow the screen or the chart. But I would like to illustrate how that max trade monitor is working, but on a realistic example, not on a fake example. where do we have the best probability to have another trade opportunity? It will be most probably in the euro US dollar, perhaps. So let me also open a max trade monitor on the euro US dollar. So similarly, I will take, for example, a 1% risk. No confirmation. So this means it will be a one button order and a 1 pip slippage. It's enough. We'll click OK, and you have two other panels opening for the euro US dollar. And so the symbol column will represent the result of the trade on the euro US dollar while it will be unfolding, and the global column will represent the result of all the simultaneous open trade. Now, this setup we got in the US dollar yen is invalidated, depending on how this candle now will end. If it will end as a red candle, it may possibly be an entry setup bar too, but it will depend on other conditions. Because it is possible that the price mode is now moving into a consolidation zone mode, but it's too early to define now. I would like to have another trade because it will be the opportunity to show how the max trade monitor gives us a clear view of the risk we are handling and how that risk is evolving while the trade is live, while the trade is open. Because this is something which is often neglected by many traders. They don't know how their risk is evolving. They know their maximum risk with the stop loss, but they don't know how the risk is evolving while the price is moving in their favor or against them, or when they move their stop loss, or when they make a scale out. And so this max trade monitor gives us exactly all the information we need. And we are still improving it to include additional finer information about the trade risk. We have 2 minutes and a half almost. We may have a setup coming for the US yen, but also for the euro US dollar. It will depend on how that candle, blue candle, will close. If it closes as a blue candle, two minutes before the close of all these candles. Now the pullback in the pound US dollar is becoming more interesting. Very interesting in the euro US dollar. Oscar, this is not a problem because we have other alternatives. Do Max have a link for a candle time indicator? What do you mean by a candle time indicator, Bjarne? Do you mean for the time remaining for the candle before it closes? So if it is that, we have a specific indicator which is free in
I'll
on
find the
internet.
link you said, Gary.
Okay. Thanks, Chris. It is a standard indicator. You know, most of the indicators we are using are free indicators we can find on internet. In fact, we have some custom indicator we have developed. Of course, some of these indicators have been tweaked for the max to give us exactly what we want to see on the chart. Let's pay attention here. Let's enlarge this window here for the USD yen, because it's possible we will have a setup bar, in which case I will have to calculate my entry price level. Okay, we have an entry setup bar, and so my entry will be a little bit higher here. So here. So if the price hit that level, I will make my entry. And I would like to show you that. I can tighten a bit my stop loss. With a pair like the US, okay, I sell now. You see, the price has hit my level, so I sell. So the trade is open. It is a short trade with a stop loss of around 20 pips, 21.5 pips. You can see that here. And so now you can see that the risk on the trade is, so if the price hit the stop loss, we will lose just a little less than 1%. It is a little less than 1% because of a round off in the size, in the calculation of the trade size. And if I close now, I will make a loss of minus 0.03%. I'm break even, almost break even, you see? So the x66 profit is always the result on the present price if I close the trade now. The result on the stop loss will evolve only if I move the stop loss. Okay? To know what is the trade size, you have the P value, $4.61 per for the trade. You can always display the terminal here, because now the trade is effectively opened, and so the size is 56 microlots. For 2 units, this means 28 microlots for 1 unit. When I will make an MX, you will see half of the size of this trade being closed. I will show you that in a moment when we will get an MX condition. I don't like to see the terminal panel. I just need to see these two numbers. So the maximum risk on the stop loss and the present result if I close the trade now at any moment. And so I will, for the time we will still stay together, I will stick to the US dollar yen. I will not check another pair now. So let's see how to handle that trade. And this trade is named a MO. We don't see that very clearly because it is written in white, but in fact it is a REMO. Okay? The trend was, the price mode was a trend mode. The maxers know why. And so, but the max trend mode doesn't make the recognition of the price modes. So it simply indicates the entry as a MO. So remember, in the terminal we have, if I show the terminal, a trade size of 56 microlots. For the brokers who allows only to trade mini lots, the size would be rounded off to 5 mini lots, of course, or 4 mini lots, because it must be an even number to be able to close half of the trade when we make the MX. So when I will push on the MX button here, this will close half of the trade. Or we can keep the terminal panel opened. That's not a problem. And you see, again, my trade is compatible with the bias I have announced. So I have said very negative on the US dollar, positive on the yen. Nothing has changed for the moment. The news release we have had have not changed that bias. So the bias is short for the US dollar yen. And my setup has been a short one. Okay? So the setup technically was a valid one. The risk aspect was appropriate. The global context was appropriate, positive for that trade. So I take that trade. And I have here chosen to take a risk of 1%. So my R is 1%. So whatever the result of the reward to risk ratio, the realized reward to risk ratio, I will have to multiply that number by 1% to have the result of the trade in percentage of the trading account. I don't expect for the rest of the day a big activity because we have, of course, an important news release 1 hour before the US Open. So somewhere in this area, we have the Bank of England announcement, and we have the non-farm payroll tomorrow. So I don't expect a large movement for the rest of the day. Sometimes we may have, but most of the time, 12 to 24 hours before the non-farm payroll, the market calms down. Two other important times during the day are here at 13, which will be the beginning of the European lunchtime period, up to half an hour before the US Open. Yeah. So all this time period between these two yellow vertical lines is the lunchtime period in Europe, on the continent, and in the city. And so most of the time we will see, if the price, for example, whatever the movement the price will do, we will see some consolidation most of the time, not always, most of the time, forming during that time period. And so in the past we were used to not take any valid setup appearing during this lunchtime period. Nowadays, since 1 year, 2 years, 3 years, with all the difficulties appearing all over the world, the professional traders even exploit that time period to make their trades or to add to their trades. And so sometimes we see some good nice movement during the lunchtime period, because they want to exploit the problems which arise all over the world. But it's still interesting to mention these two time periods. And I will not forget to draw another important red vertical line at 14 here, when we will have the Bank of England official rate. So we have the GBP. I will write bank rate that way. Now you see pips open 10. Remember, we have two open units. The price has moved only 7.5 pips minus the spread, so let's say 5 pips times 2, so we have our 10 pips. So it's the total number of potential pips made by the two units. Okay? And so while I'm trading, I don't pay attention to the XXX profit, but I pay attention in my trading process to every opportunity to reduce that risk. In fact, my priority is to handle that risk, reducing it, and possibly to cancel it at some point. Now, the risk is the maximum loss on the initial stop loss here. But as you know, my practical risk, as long as I don't have a technical problem, will be here in my invalidation zone area. And you can see that this area is at mid-distance approximately between my entry price and the stop loss. So in fact, practically, my risk is already reduced by half, more than half. If I take the middle of that area, just as an approximation, my risk will be 10 pips approximately, 10 pips which is half of my initial risk. And so my maximum risk cannot exceed 0.5% in practice, as long as I don't have an internet connection problem, of course. So we have two levels of risk, the maximum risk on the stop loss and the risk at the movement invalidation. If we get an exit rule triggering here, it will not be the case now. Whatever the result of that potential MX, I will show you the effect of the MX and the stop loss adjustment on the risk. And you will see that the risk will decrease, in fact. Now for the MX, the first MX, as I have explained last week, for the first MX, personally, I use a more advanced criteria, which is a discretionary criteria, as I have explained last week. So I make my MX only if my profit is large enough. But this is a discretionary decision. And the reason is the following. I am a very, very risk-averse trader. I hate risks. But we have to take risk when we trade. Otherwise, we get no reward. With no risk, no reward. And so, in the past, whenever I had a first MX, whatever the result of that MX, I was taking that MX. Last year, I have made a deep analysis of all my past trades. There were several thousands of them, to analyze the impact of that discretionary decision for the first MX. And I have come to the conclusion that should have I skipped the MX when the result was negative or a too small profit, and instead take the MX when the profit is large enough, of course my losing trade would have produced a loss a little larger, but acceptable, and right on line with our average losses, but my average profit would have been way larger. And so now I don't, so this means that I have a little more volatility in my bankroll, in fact. And so in my equity curve or balance curve. And so now I use that discretionary decision to make my MX only if the profit is large enough. And I explain in the course, or Chris explained in the max standard course, what large enough means. So if we get a long bar here, we still have 1 minute and 20 seconds approximately. If we get a long bar, but for the moment it is not a long bar, so it will be an exit setup bar condition. We have nice EMAs to the downside. All the time frames are oriented downwards. So technically, we have all the conditions for a continuation of that trend. We have been almost in a consolidation zone mode with a clear support level at this level, or probably here, also here, and we have had the breakout. We have the breakout of that level. Oh, thanks, Susan. But it seems that my chart is a bit frozen for now. I have to, oh, okay. Now we have a normal bar, so not a longish bar, but one of our maxers tell me that we are now on a TT. So this means that with the max standard, we would make an MX in this area, somewhere in this area, banking a profit of around 12 pips, which would be, in my case, a profit large enough. So because I got the information, let me show you now, because when we got the information, we have not to neglect that information. So here we have an exit setup for a max standard MX. The price has hit my exit level. So let's make an MX now, okay? So MX, so this means that I will close one unit and observe the risk, how it will evolve, and the profit here. I make MX. We have to wait for a quote to come. The execution will be a little higher by the spread, because when we are in a short trade, the short trade is opened on the bid but closed on the ask. Thanks, Susan. Thanks again. Okay, the MX has been made, and you can see that without changing the stop loss for the moment, the risk has dropped to minus 0.21%. And if I close I have closed 0.28% profit. Now, this is a way to reduce the risk of the trade, making a scale out. Okay. Now, with the max primer, it would happen here that the MX would not have been made. Okay. But with the max standard, we had a risk here. Okay. So this is why I have made my MX. Now, when we see the price moving in our favor, and after all, the price has moved here almost 20 pips, I can tighten somewhat my stop loss. And look how the risk will reduce. Note here minus 0.21%. I will adjust the stop loss by a few pips, around 5 pips here. Oops. I don't know why this opens. Oh, I know why. Oh, it's always the same problem with MetaTrader. I hate MetaTrader for that trade. One click. It is a one click. Okay. I should be able to take my stop loss. So right here, 0.12%. I have divided my remaining risk by 2 again. But because I have already closed 0.28% profit, I can no longer lose on that trade. My trade is a sure profit trade. And you can see that in practice, in fact, my XXX will be in that area, making my risk even smaller on the remaining open unit. You see, by pushing on MX, now I have closed half of my trade. So the remaining trading size is 0.28. Yes, Robert, I'm using the max primer and light template, not the max standard template here. This is why I have asked to our max graduates to mention me when we would have been on a TT. And you can see how very accurate we can be in our exit, way before the store RSI itself gives an exit. Yes, Chris, please.
Sorry, I think I'll just check, but Robert, did you mean that you wanted the clock and not the tiger tunnels?
Ah, you mean probably the
clock, yeah.
Okay.
I just gave the clock out to Björn. I can't find it on the website anywhere. That looks legitimate. So if anybody wants that little candle clock that's ticking away on the bottom right-hand corner of the chart, just let me know in the chat area or email us and
I can show you in the object indicator list. So
sure.
The name.
I can't find it on the website, Eusebio.
Yeah.
It's the THV3.
No, this is the question area, sorry, indicator list. So it is called here THV3 candle clock. So you can Google with that number THV3 candle clock. Okay?
Good luck.
Oh no, if you Google with candle clock, you will find. And you can specify several types of displaying it. You can change the color, you can change the corner. I think you can even attach it to the present price, and so it will move with the present price. You can see how these numbers are very important. Now that I have a remaining risk of minus 0.12%, so 0.1%, but having already closed almost 0.3% on that trade, have I any reason to be stressed with that trade? Not at all. I am in a sure profit situation, which will be even better if the price reverses and hit my stop loss. I will close my trade in this area. We have specific rule for that. And so if this trade will not close with a loss. Never. Okay? The global column indicates the same number because we have only one open trade. Should we have opened another trade, for example, we have a nice re-entry trade setup in the Euro USD as I was expecting, then we would have seen the number for the Euro USD on the symbol column and the global result for the two trades on the global column. Okay? So let's come back to the USD yen. And you see my MX has not been bad at all. Almost on this short-term bottom of that movement. This does not mean that this is the end of the trend. Not at all. It is a short-term bottom. And our exit rules, in fact, tell us now we have to consider we have a risk presenting for the trade. For the trade. Not necessarily for the trend, but for the trade. And so, because simply the price is pulling back. That pullback is indicated, for example, with an oscillator bottoming, with any other tools we may have on the chart. We never know how far the pullback will go. We never attach any predictive power to all the tools we are using in the market, not at all. But simply, okay, now the price is retracing. The fact that the price can retrace as far as it wants, this is a risk for the trade. So we need to know what is the risk we can accept before we decide to reduce that risk. And this is how our exit rule tells us to make our exit. So perception of a risk, a potential risk in the movement, and when should we consider that risk is serious enough to make a scale out. without knowing how far, and we don't need, without knowing or guessing how far the pullback can be. It can be a very small pullback, it can be a deep pullback, it can be a trend reversal. We don't care. Okay? Now, I don't believe it will be a trend reversal. We are most in the context of a true trend. Somewhere in this area we had the Tokyo Open, so we are in the context of a true trend. There is still potential for a continuation of the trend until around the Frankfurt and London close. Now, because of the Bank of England news announcement, we may have some impact. So this could be a reason important enough to exhaust that trend, that downtrend. Okay? And as you can see here, it seems that the pullback was a small pullback. But anyway, in real time, we have perceived a risk serious enough to tell us to make an MX reducing that risk. We are left with one unit. If the trend continues downward, we will benefit from that further movement. Okay? And you can see that in practice, our movement invalidation zone is going downward and approaching our entry price level, making our second unit almost break even, in fact. Once that area got lower than our entry price level, even the second unit is almost guaranteed to make a profit, whatever that profit will be. And you can see that the potential profit on the trade is progressively climbing here. If I close the trade now, I will make 0.6% profit in my account. You can see that it is online with my equity. So normally our sessions are 2 long hours, so we have already exceeded the 2 hours, but let's wait some more time to see how this trade will evolve. Okay? With the close of that candle in 3 minutes, I will be able to somewhat tighten my stop loss. This will help to further reduce my maximum risk, which is the risk I will have in the case the price reverses and hit my stop loss, which is highly not probable. Improbable, we say? The contrary of probable is improbable?
Yes, that's right.
Okay, thank you. My English is not always perfect.
I might be lying to you.
Speaking a foreign language is not a problem once you overcome the fear to make errors, because when you make the effort to speak, making errors, you will have always good friends telling you that what you have said is not correct. It's better to say something else. And so these kind of sessions for me are always a good opportunity to improve my English. Not my accent, because my accent I know is horrible. I don't speak English. I speak Franglish.
Actually, I was listening to an old video of you from about 5 years ago, and yes, your accent has definitely changed over the period.
Oh, sure. More you practice, generally, more you improve. Both were correct, Susan. Oh, thanks. Robert, yes, if you have specific questions, you can always ask your question through the homework group, Google group, okay? There is no problem. Any questions related to trading can be asked in the corresponding Google group.
We should have a scrolling party this weekend, Eusebio.
Yes, indeed, we have.
Okay.
I don't intend to be absent this week and this weekend.
Okay. Well, then as part of streamlining some of the courses, maybe we chop it up into little vignettes so that we concentrate on certain aspects of the Macs during them. So
yes.
we can, yep.
Now, if this blue candle closes in such a way that we have a bottom in the store RSI closing above the 20% level, this blue candle will be an exit setup bar. But we have to wait. With the max standard, here we have an exit setup bar, which is called the 3 RBs setup. And so with the max standard, this is an exit setup bar, okay? Because we have a specific price action pattern telling us that there is a risk now in the trade, in that trade. And I would make, in such a case, my exit approximately at the same level of my previous MX1. And so this would be an exit setup before the exit setup given by the store RSI.
I'd just like to point out how precise our exits and our entries are. Once the setup bar is closed, within, well, it depends on the time and the pair and stuff, but within half a pip to 2 or 3 pips, we'll be taking executing the stop or the entry point.
Yeah, because we are limited by the time, I will consider that max standard exit setup. If the price hit that price level, I will close my trade. And in the meantime, I can further tighten my stop loss. Look how the risk will evolve from minus 0.12% to here minus 0.07%. And see now the price failed to hit my exit level. On the contrary, continue to go to the downside. So this is good for our trade. So when the price does not hit our exit level, so we ignore it. Of course, as long as the bar has not closed, the price exit level still hold. And in fact, even when the bar closes and the price comes back, the exit condition may still hold, and sometimes we have the possibility to fine-tune our exit level. I will show you here if this will be the case, but in 3 minutes. We have a specific conditions we call by a specific name, ratchet exit or ratchet entry technique, which indicate us either an entry technique or an exit technique, but a specific circumstance when we can fine-tune, improve our decision level. But for the moment, if the price should close that way, for example, we will not have that ratchet condition. And you can see when you have these numbers in front of you while you are handling your trade, this makes your trading way more comfortable, because at some point, all the stress you may face personally is removed. Oh, thanks, Ingrid. You know, when I was younger, I was very shy. But I have always liked to learn and speak English. And so I have never feared to make errors speaking English. Mark asked, who of you guys are trading the Max ETF SAM M5 with CRB? Oh, personally, I do, Mark. I do. can see how important the understanding of the global context is important, because this gives you very often less trades, but safer trades. You see 2 trades here, 2 winning trades, easy trades. Now, don't get me wrong. Trading is simple, because finally trading is just a matter of buying or selling, but it's not easy. It requires a lot of conditions to be fulfilled and to be understood. Are you the only one? Max asks. No, I don't think so. No, we have a lot of Max graduates who have taken the Max ETF and the Max SAM ETF. Now the 2 courses are only 1 course, and so I know we have several of our graduates who trade with the Max SAM or Max SAM ETF, as I still like to call it. Now we have that bar having closed, so we are no longer in a ratchet condition, so this exit cannot be changed. And most probably the next exit condition will give us a better exit level. In the meantime, I cannot tighten the stop loss further. But one thing is for sure, soon or later, the store RSI itself will give us an exit condition, because it is now bottoming. Kiran says, I am currently trading the pound yen on CRB. It took only 1 scaling bank 3 hours after the news. Congrats, Kiran. Nice. Indeed, the pound yen, and I suppose you have traded it short, is making a similar trade as the USD yen, with, for example, here a breakout at this point. So here it would have given already a 40 pips movement trade. So every day we have several pairs. Very often we can trade. And with the Max SAM, we get more accurate entries. We would have been able to enter most probably in this area, and we have finer exit too. And so it is not uncommon to make several hours of profit even in a normal movement the price can make. And in the meantime, here our movement in validation area is now at the level of our entry price level. So now the second unit is virtually break even. And so if we will recap on the pound US dollar, should the trade have been made with a 1% risk, this would be 0.36% profit. With the USD yen, we will make around, let's say, 0.7. So we would have made with the 2 trades approximately 1% profit or more. Not a bad day with 2 small trades. Do you know that if you are able in 1 or several trades per day to make an average profit of 0.5% per day, and if you trade every day, which is not easy, don't get me wrong, but if you are able to average 0.5% per day and you trade every day, at the end of the year you triple your account. We have a TT coming up. Okay. If you are able to average 1% per day, and you trade every day, which is not necessarily easy, at the end of the year, you multiply your account by 10. Just to give you an order of magnitude of what is possible. Okay? Oh, that's on the 1 hour time frame. Okay. No problem, Ingrid. Thanks anyway. But you know, sometimes there is a confluence between TT on a 5-minute time frame and on a 1 hour time frame. So this blue candle, if it closes as a blue candle in a little more than 1 minute now, as it is now, it will give us an exit condition with the store RSI. So this will help me to define where to make my exit. I'm going to prepare something that way. And so you can see it's not a question of quantity of trade, but quality of trades. And you don't need necessarily to get large profits with the max standard and with the max advanced, with the max sum ETF. When you are able to get large movement not interrupted by important news release, you can make several hours profit. One of our members in the pound yen has just closed a trade with 3 hours profit. 3 hours. With a 2% risk, this means 6% profit. Okay? With a 1% risk, this means 3% profit. And so when we get a large movement not interrupted by a news release or several news releases, we can get 3, 5, 10 hours profit. Sometimes even more. Okay, this was our setup bar, exit setup bar. My exit would be somewhere, somewhere here. Yeah, and so if the price hit that level, I will close my trade. Let me check. So where is my open? The open is here. So 3 pips, just a little bit higher here. Oh, my phone is ringing, but I will it ring.
It has a very French ring, Eusebio.
Yeah, it's a standard ring. It is my mom phone because I am in the house of my mom here before I relocate in my house.
It's a landline then.
It's the land phone, yeah.
Okay.
And when I trade, I never answer the phone. Never. People who know me know that there are times during the day they must not call me. So because we are left with one open unit, if the price hit that level, I will, whatever the button I push, MX or XXX, it will close the trade. But because it is an XXX condition here, I will push the button XXX. Okay? And I can tighten up somewhat my stop loss. And because I'm sure that I'm approaching now the XXX, I can even tighten up my stop loss further that way in order to be risk-free even with my second unit. Okay, the price is hitting my exit level here. Let's wait for 1 pipettes. Okay, I push on the XXX button. The trade is closed, and I have closed the trade with a 0.61% profit. You can check here on the balance value in the terminal trade panel. Okay, and you can see how that these informations are highly valuable to fine-tune the way to handle the trade. So, Connie asked, what purple moving average, what setting, and what help is doing? The purple line here is not a moving average, Connie. It's a line which is built in a very specific way. We disclose all that information in our courses, but it helps to define what we call the area for the movement invalidation. And the idea is when the price comes in that area, between our yellow moving average, which is our more line, which is a 21 period moving average with a shift of 3. And this line, at some point, and we have a rule for that, we have to scratch the trade. We have to close it because the movement we are trading is invalidated. It makes no longer sense. Because when we reach that point, we have an important probability for the pullback to be deeper and even to reverse the trade. This is not always the case. You see here, the price has even crossed that line and has continued further. We never know in advance how far the pullback can be. Look here, almost to the long-term moving average. Can we accept to leave on the table all these pips before closing the trade? No, we have to define when the movement we are trading makes no longer sense. This is the aim of that line, which is defining an area. We don't necessarily close the trade on that line if the price retraces to it, but in that area. And we have specific rules for that. MTM still looks like a very useful tool, though. Does it also log the details of the trade to a file? This was not the last version of the MTM, but in the version which is there is one version on which the coder is working, and normally it doesn't log the trade result in a file but on the screen. But it's not complex to log the result in a file, indeed. Okay? But you have the result, of course, not on the trade, specifically of the max trade, but if you go into the account history, here you will have the different steps of the decision. But these different steps does not reflect the strategy. Because when there is an opportunity to make a scale-in, for example, this will appear as an individual additional trade, which in fact is not. Okay? But indeed, some of the improvements we want to have in that max trade monitor is to log the results and some additional information which are very useful. Okay? Okay. TT hold for now in our favor. Okay, nice, Peter. Mark says, my personal target are double your account all 3 months, means 8% per week. Yeah, 8% per week is very conservative, Mark, and you should, I would say it should not be so difficult to make 8% per week. Okay, so I hope you have enjoyed the presentation today. We have had 2 opportunities, one on the pound US dollar, one on the US dollar, but I have mentioned also the possibility for the euro US dollar, the euro yen, the pound yen, the pound Aussie, but I have explained when the opportunity would have came out. But I have taken 2 of them, not necessarily the best ones, but 2 which were in agreement with my analysis, in fact. I hope you have enjoyed this presentation. If you have some last question, so please, we may still take a few minutes so to answer these questions. So 2 trades. I have said short-lived trade, but globally, you see, when we add the 2 trades, the second one is in the account history, in the trade history, but not the first one, because the first one I have marked it simply manually. But if you add the 2 trades, it would have been approximately a 1% profit for the day with just 2 trades. For this morning, okay? Because I suspect we may still have some small opportunities this afternoon after the news of the Bank of England on their interest rate announcement here, 1 hour before the US Open. Oh, thanks, Fiona. No specific questions on what we have seen, on what Chris has explained?
Okay, and right at the very start of this session, the videos, you'll see what courses we've got on offer and the prices for them. So we've got the primer course, which is just a little 2-day course over a couple of weeks.
Do you want us to switch on your screen to show the PowerPoint page?
Can do. Sure.
Okay.
Let's try that. Sorry, it's... One moment, caller. It's a bit of a task fighting with these things sometimes.
Oh, thanks, Peter. I always like the comments, positive or negative, because I pay attention to all of the comments. And when there is a negative comment, this always gets my attention, because this means that perhaps something has been wrong in what I have presented or explained. And this is a good opportunity for me to try to improve what I'm presenting.
Okay, for those of you who've got flashing screens, I've just taken over, and I'm trying to find, I guess it's this one.
Yes.
Okay, thank you. So those are the 2 courses that we've got on offer, and Craig will be sending out, with the video that comes through shortly, these links here if you can't pick them up. I'll try and scrape them and put them into the chat area so that you've got them. But the max standard, as you saw from my presentation right at the start, really does boost the profits. Max Primer is profitable, but we only train it just to give you an idea of what we are like, so that you can test us out and see what style we have, if we're legit. And we presume that once you've figured that out, that you'll jump in and take the max standard, and this will really boost things along. Even if you've got a good way of following trends at the moment, the techniques from here will boost those again. It's quite amazing the way it works, and it's very safe. We couldn't get into it today, but the further you are in the trend and the more that you add to it, which sounds like you're making it more risky, it actually becomes less risky as you go further and further into the trend. It's quite counterintuitive. And so we've got those 2 courses, and then we also have a 2 and a 3 course package, which wraps up Primer Light, which is an intermediate one, and Standard altogether for the 3 course package. And that takes about 4 months to get through. And the prices are, if you want to check those out, are in these links here as well. And in the meantime, I'm trying to find them in the background here to put the links into the chat area. And I can't find them. So you keep talking, Eusebio, because I can't talk and do this at the same time.
Yeah.
Quick. Don't leave any dead air.
What we intend perhaps to do in the future is to make such live sessions more frequent. Not only when we make our sales sessions or presentations, but more regularly, simply to illustrate some of the concepts of the max in real-time conditions. So this is a project we have.
Okay.
And perhaps not necessarily with the max primer or light template, but with the entire template. And choosing appropriate days when we can expect not too many news and so larger movement we can exploit. So we have to choose them very carefully. And
yeah, thank you everybody. I've put the links into the chat area and also the question area if you are interested to have a look at them. They have the links for the particular course as well as the group courses that the packages that we've got available at the bottom. It's a special package. And yeah, thank you very much for your time here. It was a nice session, Eusebio. It was quiet, but it was worthwhile watching that.
Yeah.
A lot of people.
Specific conditions, specific trades.
Yeah, and a lot of people seem to think that trading is supposed to be like Gordon Gekko with that trading movie where everyone runs around screaming their heads off and stuff like that. It's not. You've just got to be really quiet and know what you're doing. it's like surgery. You don't want to be have your surgeon running around screaming his head off all the time or doing stuff like that. You want them to be methodical and know what they're doing. There's nothing aggressive about it. It's knowing your job. Okay, I've done enough. Eusebio, over to you.
Yeah, Oscar. Some of these sessions will be free, some will not. It will depend to whom the sessions will address. The great seminar. Oh, thanks, Peter. Glad to hear you intend making it more frequently. Okay. And thanks for our Max graduates which are in our chat room. So I also appreciate all your comments. And so I wish you a great rest of the week. Be prudent this afternoon with the Bank of England rate announcement, and especially prudent tomorrow with the non-farm payroll. That being said, so I wish you a great rest of the week, a great weekend, and see you next week in the Max Primer or in the Max Standard course. Bye everyone, and take care in the meantime.
Thanks everybody. Bye-bye.